Hello and welcome to BQ Prime. A very good morning to all the viewers. You're watching Trade Talks and I am Hiral Dadia. Clearly, if you go to see in terms of yesterday's session as well, we've actually ended flat. The bias has remained absolutely positive. The underlying tone that we have been discussing over the last couple of trading sessions has been clearly indicating that a base has been formed. Investors are actually now using buy on dips and sell on rally as a strategy. How much that will sustain is what we need to wait and watch. But clearly, the FIs have continued to remain sellers, but the DIIs have continued to remain buyers. So it's a market that is being supported by the domestic retail investors as well. Very quickly, 19,400 is the level that we are watching out for because Nifty has been holding this level for a second consecutive session. Yesterday, we recovered by almost 0.4% from the day's low, so almost a 90 points recovery that did come in. If you see in terms of broader markets as well, the uptick has continued. And to reiterate, in spite of the kind of cuts that we've seen from September to now, we have the broader markets that have continued to outperform the benchmark indices. Very quickly, if you see in terms of Bank Nifty as well, a fourth consecutive session of rise is what we've seen. A 500 points recovery is what we've seen in terms of Bank Nifty from the day's lowest levels. Let's quickly look at the sectors. Now, real estate has been an interesting one because the kind of rally that we saw in terms of real estate, that actually came to a standstill yesterday. Now, is this a pause or is this the end of the journey for real estate is what we need to ascertain. But clearly, from a numbers perspective, second quarter has been slightly muted if you talk from a pre-sales perspective. But overall, the trajectory in terms of FY24 seems to be absolutely strong on the back of the conversations that we've had with managements. In terms of pharma, again, that was the top sectoral gainer today, yesterday's session as well. So interesting moves, there is this buying interest that is back in terms of pharma as a sector. Alchem Laboratories, Gland Pharma, Aurobindo Pharma, these were a few of the names that actually led the uptrend in yesterday's session. And you have the PSU space, which is absolutely up and about and in the limelight as well. So overall, if you go to see clearly, it has been a strong day. Gift Nifty as well has been indicating some strong moves. And if you see from a global market perspective as well, I think this is the longest winning streak that we're seeing in terms of US markets since November 2021. So overall, you have S&P 7 consecutive session of gains, NASDAQ 8th session of gains. So good moves coming in there. The 10-year treasury yields have also now cooled off, and we're in that 4.5 to 4.57 kind of a range. Brent crude has cooled off as well. $82 per barrel is what we're trading at. And people are talking about demand concerns from China. So how much does that come to the rescue in terms of higher crude prices is what we need to see. And you have the dollar index, which is at around 105.6. So there is support coming in from the global markets. DIIs are coming in as a support as well for the Indian markets. And all of this put together could probably, get us to a positive bias and an uptrend from here on. But how big that's going to be and how sustainable that's going to be is what we need to wait and watch. But let's quickly shift focus now in terms of stock-specific action. Reliance Industries is a big one to watch out for. Again, with the kind of market weight it has as well, any moves on that stock will obviously have a bearing in terms of Nifty 50. We're talking about a fundraise through issuance of bonds. Vishy is standing by to get us more in terms of what he's picking up and what does this mean, because I think this would be one of the largest after 2021. Vishy, good morning. What are you picking up with regards to Reliance Industries fundraise?
Good morning, Hiral. So yes, Reliance Industries is looking to raise up to about 20,000 crore. Now, these are partly paid NCDs, partly paid, meaning that a part of these funds will be raised this week, and then another part, the remaining part, will be raised sometime next month. And that's how partly paid NCDs work. Investors put in their bids, and then after a certain period of time, they pay the full amount. What is interesting with Reliance Industries is this is going to be their first ever bond issuance since 2020. I'm talking about the rupee bond issuance since 2020. And this will be largely used to refinance external debt, which, by the way, has become significantly more expensive, while Indian yields have remained largely range bound. So it makes a lot of sense for a corporate to go out and raise domestic funds to pay off any kind of external financing. what is also interesting with regard to Reliance Industries is that this is going to be a 10-year bond maturing at some point in time in November of 2033, and this money is largely also going to be used to boost the company's investments that are currently going on. Outstanding debt as of 30th September was about 2.95 lakh crore for Reliance Industries. So this will sort of add to that. Now, outside of HDFC Limited's 25,000 crore fundraise that they did, this one big fundraise that they did last year, no other conglomerate has raised this large amount of money through private placement debt issuances. What sources are telling us is that a large insurer is likely to participate in this private placement, and that's how Reliance Industries is going to be raising this money.
Right. Thanks, Fishy, for getting us the details. And it's been interesting to see how Reliance has been moving as well. No major action that we've seen from Reliance Industries in the last couple of months. It's fairly remained flat. So it's going to be interesting to see how and what the use of the funds are expected to be like as well. Moving on, you have NOLES, which reported numbers. Now, what the numbers mean for a Hindalco is going to be interesting to see, because that's going to have a direct bearing. Hindalco and the metal space has been in focus as well. Rishi standing by to get us more in terms of what the NOLES numbers tell us. Rishi, good morning. How has the quarter been for NOLES, and how do you see Hindalco reacting on the back of this?
So based on what analysts are saying, what they are saying is that the EBITDA, although it fell by about 4%, it was still much better than they estimated. Now, net sales overall, it fell by 14%, primarily on account of lower realizations and lower aluminum prices globally as well. Now, if you look at the margins, however, they declined much less. Now, this is because this was partially offset by lower costs. And if you also look at the EBITDA per ton, it came up 1% higher at $519 per ton compared to $514 in the last year. And the company has continued to maintain its EBITDA guidance for the next quarter, which is at $450 to $500 range. And for the fourth quarter, it has maintained its guidance for $525. Now, if you look at what this means for Hindalco as such, it will certainly have a huge bearing, because if you look at the share that NOLES has for Hindalco with respect to revenues, it has been at about 60% of the revenues. If you look at EBITDA, again, about 55 to 60%. Similarly, its shipments, even if you look at the overall volumes for Hindalco, NOLES volumes accounts for about 60%. So the estimates, if you look at Bloomberg estimates, also they point to somewhat similar results compared to what NOLES got. The Bloomberg estimates show that the revenue is expected to fall by about 12%, and EBITDA will, however, rise by 5 to 6%. And this is also because Indian companies are also facing lower cost for the current quarter, so that will also factor in over and above what NOLES is saying. And the net profit is expected to rise by about 3%. So Hindalco's result is expected on Friday. So we'll certainly look out for it, and it's a big one, a Nifty 50 company.
Right. And any brokerage views on this, Rishi, in terms of, what is their call basis NOLES earnings?
So Jefferies did point out that because its EBITDA per ton has been improving over the previous few quarters, it does give it confidence with regards to maintaining the EBITDA guidance. And the sequential recovery in shipments is also something of a positive for NOLES. And however, NOLES has continued to be cautious with regards to the specialty segment because the macroeconomic environment is uncertain. And over and above that, Macquarie is also adding that the packaging volumes will improve sequentially, given that the auto and aerospace demand continues to be healthy. And also the expansion continues to remain on track. So that's also a positive for Hindalco and NOLES.
Right. So this is going to be an interesting one to watch out for. But apart from this, you're tracking a couple of other stocks as well, which have reported numbers. You have the likes of a Prince Pipes, Sri Renuka, I beg your pardon, Sri Cement, Balrampur Chini. Sugar has been in focus as well. If you could take us through as to how have the numbers of individual companies be, and what do you see in terms of market reaction?
I would say a lot of strong earnings post-market as yesterday. So firstly, I'll focus on Sri Cements, where the revenue was up by about 19%, EBITDA was up by about 63%. Now, this was primarily on account of a lot of cement companies are facing higher prices for the current quarter and also driven by lower cost. And its volumes also rose by about 10% to 8.2 million tons. Its share of premium products also rose by about 9.5% compared to the previous year, 7.5%. Now, if you look at a couple of sugar stocks, we have Balrampur Chini, where the revenue is up by over 38% and it reported an EBITDA profit of 165 crores compared to about a 16 crore loss in the previous quarter. Now, Balrampur said that while the industry is anticipating a general decline with regards to sugar production for India, they are preparing for an upswing in production volume. So that is also a strong outlook that the company is pointing. Then we have JB Chemicals, where the revenue was up by about 9%, and this was primarily driven by 11% rise in domestic formulations, and also its gross margins stood at 66% compared, and this was a 350 basis point rise year on year. Then we have Lux Industries, where the revenue was flat, margins and profits declined due to higher costs. The stock was active quite a bit yesterday because its volumes in the market yesterday was 6.6 times its 30-day average. So the stock will probably react today as well. Then we have Apollo Tyres, where the company saw a marginal rise in its top line, while with the revenue from the Asia Pacific and Middle East and Africa segment, it increased significantly from 56% to 61% over the year, and the improvement on margins was mainly on the back of decreased cost of raw materials. Then we have Skipper, where the company expects a revenue growth at a CAGR of 25% over the next 3 years, and it performed well, and it saw its highest ever revenue quarter, and the profit rose by 6.6 times. Then we have Prince Pipes, where the revenue was up by 3% at 656 crore, and this was also, and over and above that, there was a 100 crore decline in cost, which drove a reported profit of 70 crores compared to a loss of 24 crores in the previous quarter. Then we have Prestige Estates, where quite a strong set of numbers. Revenue was up by 56%, net profit rose 6 times to 910 crores. Now, this was driven by a higher sales volume and higher realizations. Its sales volumes were up by 50%. Its realizations for apartment and villas was up by 29%. For plot sales, it was up by 62%. Then finally, I have Mishra Dhatu Nigam, where the EBITDA was down by about 38%, and this was despite a 26% rise in revenue, because total expenses rose by 50%, and raw material costs specifically, they rose by about 82%. So the stock may see some downside today in trade.
Right. So I think it's a multiple. It's a long list that we need to watch out for, and probably wide gyrations can be expected as well. Thank you, Rishi, for getting us all of these numbers in trade. Another stock that will be in focus in today's session on the back of their numbers is Apollo Hospitals. Now, the hospital space has been pretty interesting because clearly we're talking of higher occupancy rates. With that, it's more of a capex cycle that's actually playing out for all of these hospital majors, because they are the ones who are now increasing their capacity in terms of number of beds, and that's what the story with this segment is. In fact, recently as well, you had Morgan Stanley as well as Bank of America Merrill Lynch, who actually initiated coverage with regards to Apollo Hospitals, and what they have indicated as well is that they're actually is projecting a robust EBITDA from here on. But let's quickly see what the earnings point out to. We're expecting a double-digit increase in terms of the top line. Margins are expected to dip slightly. However, the profits are basis. Now, the reason we are seeing this kind of an improvement in terms of the profitability is the occupancy rates that we were just discussing about. The average revenue per bed is expected to improve as well. And the operating leverage is something that is expected to be on the positive side. If you talk about the EBITDA growth, the business hospital has been on an uptrend. The losses have reduced, and this is on the back of the change in the discounting policy of pharmacy business for Apollo Hospitals, as well as the performance of the ancillary businesses is expected to aid Apollo Hospital as well. Overall, if you see from a stock price performance, it's been an absolute volatile ride. I think a 10 to 15% up move is what we've seen in the last 1 year, but it's not been a constant up move. You've seen those ups and downs with regards to Apollo Hospitals as well. So an interesting one to watch out for from the pharma pack. So let's keep all our eyes on this counter. But moving on, in terms of other news in today's session, you have Indigo. Now, that's going to be an interesting one on the back of the concerns with Pratt and Whitney. Vinay is standing by to get us more in terms of what he makes of this, how is it expected to impact an Indigo? Because in spite of all of these concerns, Vinay, I mean, you have an Indigo which has continued to maintain its guidance as well. What would this actually mean?
Hi, good morning, Hiral. So, this would actually mean that the costs related to the company's operations will rise because already they have aircraft grounded about close to 50, and this will add 30 more to that tally. And the aircraft that they have, which have these faulty Pratt and Whitney engines, amount to 136, which means that almost two-thirds of their Pratt and Whitney fleet will be grounded. So this will mean that the company has already taken some mitigating measures because they were expecting this. So these mitigating measures involve retaining older aircraft in their fleet, which were going to be replaced. And it also means that they'll have to turn to the secondary market where the leasing rates are higher compared to the primary market or where the orders have already been placed. And these orders are not coming in at the pace that company is expecting because there are production issues over there as well. So if they go to older airplanes and they also look at the secondary market for leasing, this will mean higher cost for the company. And this is also important because it comes at a time when competition is rising. Tata Group owned Air India Express is looking to induct 50 aircraft over the next 15 months. So this will also mean that Indigo's dominance in the aviation market with more than 60% market share might be under some threat.
Right, so the market share can be a threat on the back of this as well. Thank you, Vinay. There could be some bit of a downtick that could come in terms of where Indigo is concerned in today's session. But moving on, one of the rock stars in trade, you have a Bombay Stock Exchange, BSE. That stock has actually crossed the 2000 mark for the first time ever. It's interesting to see because in 2023 itself, the stock has actually given returns of almost 3.5 times. And in the last 3 consecutive sessions, we've seen that up move that has come in with regards to where BSE goes. Now, from a yearly performance also, if you see BSE, it's one of the best years that BSE has seen since listing. I think, if I'm not mistaken, the stock did list in 2017. And overall, the buyback, in fact, on the back of this kind of up move was revised. And after the revision of the buyback as well, you see the stock price that has almost doubled than the buyback price. Now, on the back of this, you did see the buyback actually receive a poor response. The addition to this is now that the transaction charges with regards to where the equity derivative segment goes, that has been revised upwards, and this is effective from November. And this is one of the reasons why it's a booster dose as well for a BSE. The key question now, what analysts, I beg your pardon, what investors are asking is whether this is going to be the right time to book profits, or is the uptrend expected to continue? Because from a market share perspective, BSE still stands at around 9%. The management has indicated in the past as well that around 10 to 11% is what they would like to have. So probably that uptrend could continue with regards to where Bombay Stock Exchange goes. 2%, more than 2% up, 2000 is where it's trading at. 3 consecutive sessions of gains, and from here on, the journey is going to be interesting with a BSE. So that's all about BSE. We will be watching out for this counter pretty closely in trade as we speak. But moving on, a lot of other stocks that continue to remain in focus. You have Inox Wind that we've been watching out for closely. Lupin is another one. Saloni is standing by to get us more in terms of what it would mean from a market perspective. Saloni, good morning.
And good morning. So firstly, we have Inox Wind. So the company will raise 500 crores through the issue of preference shares. Just over a week ago, Inox Wind Energy had raised 800 crores that was infused in Inox Wind to help the company repay its external debt and get closer to achieving a net debt status. So Inox Wind had also raised rupees 500 crores back in August from its promoter entities, the proceeds of which were used for the repayment of debt. So it's clear that the company is on the path of achieving a net debt status. Then we have Lupin. that received a tentative approval from the US FDA for its canagliflozin and metformin hydrochloride extended release tablets that are basically the generic equivalent of the Invocamet tablet, which is used as medication for the treatment of type 2 diabetes. Then we have Voltas. The company denied news that the Tata Group is considering selling the home appliance operations of the company. So the company reaffirmed its commitment to the home appliance business. And lastly, we have SJVN. The company received a letter of intent for the purchase of 200 megawatts of solar power from the Uttarakhand Power Corp. So UPCL is looking to purchase solar power for rupees 2.57 per unit from the company's 1000 megawatt Bikaner solar plant. These allocations of the solar power from the project will be as per the power purchase agreement that will be signed between the two companies in the near future. And this development will contribute towards meeting solar renewable purchase obligation targets and addressing the power deficit.
Right. SJVN is going to be an interesting one, Saloni, on this one because their trajectory is looking pretty strong. The capacities that they have added is also really strong, and the stock price movement is probably up the roof. Thank you so much for getting us the details. Continue to watch our SJVN in trade today. But moving on, you have life insurance companies that continue to remain in focus. Now, clearly, if you go to see on the monthly data, it's going to be interesting to see how the numbers have panned out. Last couple of trading sessions, we have seen those, moves in terms of from an upward bias perspective with life insurance companies. Harsh is standing by to get us more in terms of what does the data mean, and there's a HSBC report on the same as well. What is their view, Harsh? Good morning.
Good morning. Good morning. Let me try and break down what the numbers actually mean and what HSBC is actually saying on the numbers. So first off, let's try and focus on the total APE. We are seeing LIC's total APE continuing to decline. That continues to be a bit of a concern, 11% down on a year-on-year basis. Private insurers, though, are making hay, and therefore the total industry APE has grown by 5%. Private insurers have gone up in terms of their APE by 19%. And among the top players, you're seeing the likes of Max Life growing at 41% for the month of October. Bajaj Allianz grew 29%. SBI Life grew 20%. ICICI Pru Life grew 18%. Again, marked with regard to ICICI Pru is for the year-to-date period, it's grown by just 1%, the total APE. So that 19% growth is a positive, definitely for the month of October. You're also seeing HDFC Life, which grew 15%. Now, on the individual APE front, switching over, overall, the industry grew at 13%, with LIC growing just 2%. In terms of private insurers, again, the growth was good. 20% growth overall. You're seeing the likes of a Max Life, 38% higher. Bajaj Allianz grew by 27%. HDFC Life 21% being clocked, and you're seeing the likes of an ICICI Pru as well as an SBI Life clocking 21 and 16% respectively. So a good set on the individual as well as on the total APE side for private insurers. On the individual APE side, what we're also seeing is that the larger insurers are growing well. The smaller insurers grew slightly slower than the larger ones. So the larger one seems to be taking the pie. And one more key piece that I note is that your average ticket size has not gone down, Hiral. So, and that is essential because of the tax arbitrage that has been removed from the larger ticket size policies. So, and despite that, the average ticket size has not gone down. So that's one other key positive coming through.
Yes, and with this, what you should do with the LIC is important because in the last 1 month, if I'm not mistaken, 20 to 25% is the kind of cuts that we've seen with regards to LIC, and that's clearly reflecting in the numbers as well, right? With the market share that they have been losing, and you have the private players which are gaining. So I think this is an aspect we need to consider as to what should one do with the LIC, and should the funds then move from a stock price perspective as well to the private life insurers.
Right. And since the IPO, LIC has actually gone down by around 25 to 30%, right? So from the IPO price, and it's still being valued at well below par to the private pairs. So when you're looking at price to embedded value of LIC, it's at around 0.6 to 0.7 versus some of the private life insurers which are valued at anything between 2 to 3 times, with a Max Life, of course, being an exception, but otherwise 2 to 3 times. So,
but don't you think it's a fair value then, Harsh? Because they're losing market share, one. Private guys are gaining. and clearly the market is recognizing that fact and not giving it that valuation what the private guys are actually commanding.
Yeah, but below 1, Hiral seems to suggest that your on your existing policies also you're not going to make a decent enough profit, right? And of course, LIC is a behemoth in terms of DI investments in India. Every time we've seen a 25-30% decline in the market, we've seen LIC jump in and make those investments. So essentially, that will even mean that the underlying value of LIC ought to remain as is, if nothing else. So it's of course a debatable topic.
It's business versus the investments that LIC makes.
Correct. So and that 0.6, 0.7 debatable in terms of valuation.
Absolutely. I think that's something which we should probably deep dive. Thank you, Harsh, for getting us the details. So that's with regards to LIC as well as the private insurers. Let's see how they actually open up in trade in a couple of minutes. But moving from the secondary markets to the primary markets, a lot of action coming in there. You have a Mama Earth listing that happened yesterday, plus a couple of IPOs that are ongoing. Himansh is standing by to get us more. Himansh, how was the Mama Earth listing number 1?
So Mama Earth had a muted debut, if one could say so. I think on exchanges it listed flat, and about 1% uptick was noted, and the stock closed with gains of about 4% with respect to its issue price. Also, now you have companies from all walks of industry coming in, jumping in on the primary market momentum. And SEBI has just approved the IPO plan of Mukha Proteins, which is a fish protein products manufacturing company. And the IPO comprises of a fresh issue of 8 crores, and there's no offer for sale component, which we have seen in a couple of previous IPOs here. The Karnataka-based firm will be utilizing 120 crores for its working capital requirements and 10 crores for its funding its future growth as well for its subsidiary. Now coming on to the IPO subscription data and what those numbers indicate, Protein E-Government Technologies, the IPO was subscribed 3.21 times on its second day. Non-institutional investors subscribed 6.23 times, and retail investors were not too far behind with subscription close to four times. Then you have Ask Automotive, where the IPO was subscribed 0.38 times on its first day, and the bids were led by retail investors who have already subscribed to 56% of the reserve portion, followed by institutional investors coming in with 41% subscription. And lastly, you have ESA Small Finance Bank, which saw its IPO conclude yesterday, and it has gotten subscriptions of over 73 times on its final day. So strong interest from both institutional and retail investors alike, and let's see how the momentum shapes up in November and December as well.
Absolutely. Thank you very much for getting us the details. Listing is going to be interesting as well for all of these names. So lots to focus on from a primary and a secondary market perspective. If you see Gift Nifty as well, that is indicating some bit of positivity in today's session. How sustainable that's going to be and which are the sectors which will lead to that uptick is what we need to wait and watch. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.
I wanted to wish all the viewers of BQ Prime and the channel a very happy festivities and a very happy Diwali. Happy investing.